Burgess and Bolton's weekly wrap-up.
I always forget that we uploaded that. It's got the wrong date on it. I mean, it looks good, but anyway, if people are wondering, it isn't the 18th of October.
One day it might all be right.
It might
get everything right.
Yeah.
But in the meantime, we'll get one thing wrong every week.
It's the 8th of November. That's what we're looking at. Data jam, claims transformation, and tech trends as well. So welcome everybody to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. As I mentioned, this week we're going to focus on claims, and we're going to introduce Paul Willoughby, friend of the show, to talk about an article that he wrote following the claims conference a few weeks ago, and we're also going to talk about some tech trends as well. But first, Ben, let's do the news. And yeah, big news this week. American election news. Donald Trump in the White House again. Were you surprised by that result?
No, I wasn't really. I was surprised by the margin, but then I know that the pollsters seem to get it wrong every time. So, they were miles out. Not really surprised. No, I think the general consensus seems to be that it was about the economy, stupid, and pocketbook economics, and Trump had been in before and it wasn't too bad. Biden hadn't necessarily done a great job, and Harris didn't seem to get onto that and didn't want to talk about it. So, I did politics at uni. The first thing you learn about American elections is it's first and foremost about economic issues. So, yes, not surprised. We're in for interesting times.
Very interesting times. Yeah. So let's talk about the. I think you got this stat up. European voting intentions in the 2024 US presidential election. Massive chart. What the hell is that, Ben?
What the hell? Someone was saying these are the wrong colours. How dare you put this up? Because Democrats have been blue from the beginning and Republicans red, which is true. Anyway, they've used orange and blue, which is a bit of a faux pas for this chart, but it's showing what people would have voted if they were American, but they're not. They're European.
Right.
So I guess it's a sort of. It's a bit of. It's kind of interesting because I think it shows the kind of Eastern European countries. Kind of preference for, if you like, for perhaps stronger autocratic leaders, perhaps preferring Trump. But it's very stark, if you go from, really, what is it, Czech Republic, just below that, Slovenia down, it's a majority then in favor of Trump. Whereas if you go up towards the top into, say, what you'd call the more liberal countries, and perhaps accepting Finland because they just have a bad history with Russia. That really is, very pro Harris. So it shows how the lines are really divided in Europe anyway on your kind of liberal tendencies, I suppose. And that's maybe not surprising, but it shows that if, why would Trump spend much time trying to get Europe on side or non-Western Europe, when that's the case, Actually, UK is quite a way down, so they maybe did the poll in Kent.
Yeah, they might have done. Yeah, or Clacton. I think what is going to be interesting, just look at these and where the countries lies. If you look at Germany, that collapsed. Last week, that government, and there seems to be more of a right-wing resurgence there, and certainly in France with Le Pen, it's going to be interesting if these numbers move to the left. But that's wrong.
I agree. I was just going to add, if I can, just a few thoughts. I've picked up a few thoughts. I didn't put anything up to show, but on just what people in the various press, insurance press are saying about Trump. And I think the bottom line is they don't really know, like everybody else doesn't really know what Trump will actually do or what the constraints are. But I think some of the things we touched on in the past about general trends in insurance and how so you've got less regulation. You've got so that might be a thing. There might be lower regs, perhaps not more regulation on insurance, which will please insurance. More business-friendly judges, potentially curtailing social inflation a bit. But again, social inflation, as we talked about a few weeks ago, is driven by as much by division, sort of view of elites, as it is by court judges' decisions. So that may go the other way. I think an interesting one is a more dovish approach to antitrust or monopolies, so letting more deals go through. And actually in the insurance market at the moment, I think that does matter because that is likely to happen, consolidation. So I think some of the big wigs in the market might be thinking of going for deals now that they wouldn't otherwise have done. Tariffs might raise consumer prices. Oil obviously back on the agenda, and windstorms off, and climate off, and so on and so forth. There's some debate about all of that, but definitely there's. And finally, ESG. That's likely to. I think we've already talked about this as well. That is likely to be pushed further off the US agenda as well. So yeah. I don't suppose any of those things are particularly surprising. They're kind of general thoughts about what Trump might do. But the other one I suppose should be on that list is he is full of surprises. So, all or none of those may come true, and something utterly, completely different left field may be coming that we don't know about.
Indeed. Well, you'll hear it here first. No, you won't.
Or not.
But anyway, right, let's move on from that super big news, super national news. Yeah. Let's have a look at the hurricanes and kind of the impact on some of the London market insurers. I think that's pretty interesting.
Yeah, so a lot of stories that come out about, this is, cats rising costs of insurers, but this story is interesting. So the two of the quoted companies on the London Stock Exchange, Beazley and Lancashire, both saying that their results are not going to be massively impacted by the hurricanes, Milton and Helene, losses ranging from about 110 to 170 million, but nothing that's material, I think, to what their results will be. And I think this is the interesting thing, is they're going to turn in results. Beazley are saying probably an 80% COR, Lancs mid-80s, really, very, very profitable results, probably some of the best they've had. But we've been talking obviously about a softening market. Now, I think that probably will be also a signal that the market is going to soften significantly now because rates will come off. So it's a sign of kind of this historical strength of rate, and potentially, but particularly rates, but also some of the investment returns as well. So they'll do well. There'll be some great results coming in, but we are still in for a period of huge competition now going forward. And that's certainly the sense I'm getting from talking to people in the market, is that they're gearing up for real competition. And actually, Beazley puts a bit of a warning out about cyber risks, cyber claims increasing and all that sort of stuff. So,
yeah, that's one to watch, and I think we'll probably get Paul's take on it and what that means in terms of the emphasis around claims and perhaps technology as well. A little later in the show. It's really interesting. I think you had another story as well, Ben, which is around art. I'm not sure whether these two are related or not.
Well, you imply that I actually think about this beforehand.
I did. I kind of left it open so you could go.
No. Well, this could be quite random, and I could try and link it up, but I won't attempt to. I just thought this was an interesting story, and then I built a whole rationale for why I've included it, which I'll come to. But fine art insurance, I think it's always been an interesting area, fine art insurance, because John Muir, when we interviewed him a few weeks ago, was talking about fine art. And how it kind of becomes a bit of a bellwether for the specialty insurance industry as to how you need to have expertise. And this is quite a good article, really, about a chap called Ronald Perlman, who's a rich, well, in my terms, a rich guy, because he's got £400 million worth of art in his apartment, or is his place in the Hamptons. Anyway, he has a fire and he wants to make a claim for damage to those paintings. Now, they weren't fully destroyed. They were just damaged by I presume, by the smoke and things. And there's one of those, that Elvis one there. And he said one of the paintings had lost its oomph as a result of this fire. And it sort of epitomizes why this is quite tricky when you come to the actual claim itself and how you evaluate it. So the actual premiums will cover the restoration and plus any calculated depreciation on these damaged artworks, but it's pretty hard to assess. And I've seen this in presentations about when you have wildfires that affect vineyards, for example, whether the grape is improved or not by the smoke, because it can improve grapes, interestingly, I suppose, and it can destroy, but you have to have a quite deep scientific technical analysis. But as in many of these cases, one expert will disagree with another, so they cancel each other out, and you're left with a sort of dispute between experts and valuers. So it's just interesting to read about just how much has to go on, and again we'll talk about this in a minute with claims, but how much has to go on way after the policy was written. So how do these policies get written? And this is also interesting. So typically an insurer will set a premium at less than 1% of the value of the artwork. So it's pretty small in relation, and that's presumably because very often these don't get damaged. It's a relatively rare event, which is a good insurance product, quite right. But the valuations are tending at the price the policy point tend to be put up very high, because the people who own them say, well, I'll put the highest max value on it I can. But that also suits the insurer because they get a higher premium, albeit a small percentage. What then happens, of course, is if a claim comes in, there's an almighty argument then over this valuation was way too high, and you're back to a sort of battle over the premiums. And then the final point on this as well is how this is all being impacted by more general trends like climate change, where you store paintings and things like that. So there's some of those things are coming, insurers are questioning because they're saying, well, these storage facilities are not as secure or as unexposed as they used to be. And then the other thing, of course, which you will have seen in the press is when you have eco-activists throwing soup or things at paintings. So that's another one that the underwriters are raising as a potential additional risk if you're putting them in museums. And then this one, which seemed a bit far-fetched, is people taking selfies and walking backwards into paintings. Which, it's in the article here, but I just don't really think I've ever heard of that. It seems like the most spurious reason for an underwriter saying, I'll have to put your premium up in case someone takes a selfie and walks backwards and falls into the Mona Lisa.
Yeah.
I don't really know where that came from. But it was a good article until that final sentence, which sort of made me a bit suspicious of what the underwriters were saying, the risks were that they were charging for. But anyway, we'll kind of leave it there. But it is also the case, they say, that, art claims go up significantly in times of recession, because often, these wealthy people will have something go wrong and they need to sell a piece. So it's need, not greed. They need to sell one of these things or make a claim on one. They try and make a specious claim on one of these things to pay off a debt. So it's quite a good, sort of microcosm of what insurance's complexities are, I suppose. And I'm sure Paul will come on and have an immediate solution for making this all work properly.
Yeah, indeed. Well, we'll watch that. That's again, fine art is not a a policy that I take out in my house, not with the pictures. I've got pictures of like Melody Maker front covers from the 90s. That's all I've got.
Yeah. Well, they could be worth something at some point, but not a lot. No.
No. Indeed.
No.
Thanks for that, Ben. So we've done the American election, covered that. Brilliant. All in 10 minutes. Super. So let's bring in Paul Willoughby, and have a chat to Paul. Hello, Paul. How are you?
Hello, chaps. I'm very good, thank you.
Hi, Paul.
Delighted you could come on, because you, the main purpose is because you very kindly wrote a summary following the London Market Claims Conference last month, which was kind of your key takeaways, which we thought were really interesting. They got a bit of traction on LinkedIn as well. And the main thesis around what you were talking about is that actually the shift in terms of transformation is moving from underwriters perhaps into the claims domain. And you kind of took that away from the conversations and the panel discussions that we had during the course of the day. So I firstly just wanted to kind of give you the opportunity to kind of summarize your thoughts and your feelings and why you think that, and then we could have a chat about it.
Yeah, happy to. So, I mean, it was great conference for me. I always like the claims one because it's more practitioner driven, I think, and we always end up with a few sort of claims experts having some quite heated debate. So on the merit of claims, and I think that's my point. The last few years, I've seen a lack of, well, in all my career, I've seen a lack of investment in claims. I actually started in claims. I think the one investment I had was a bigger suitcase to carry more claims files around the London market. And then we moved into sort of the ECF era, and everybody thought that was it. That was great. And then, very rarely do we see people doing new claims admin systems, building client portals, the digitization. But actually, there was more stories around service this year at Tintec. And I think my takeaway was that people are starting to realize that this is your one true point of differentiation. I know Ben talks about it a lot, and I'm slightly biased because I truly believe that that's your one chance with a risk manager to get it right. And that the claims team should be brought to the front and center of your propositions. And worked at lots of insurance companies, but, my most recent one was definitely claims, focused. But it was really encouraging to see more of the peers in the market talking about, we're doing stuff. Our focus is about bringing people more front and center. I think we've got a long way to go. And there was also, lots of conversations about talent development. I think that's part of the problem. We seem to have lots of, we hire lots of litigators, and litigators are maybe extroverts, they may be introverts, but we hire people from legal and really technical expertise. They're not very salesy people. And that was one of the conversations that I raised, was actually, do we need more salespeople in claims?
So I'll let you come in a second, Ben, but we've been talking about kind of claims should be the shop window for many years at that event. And I think we can all agree that actually that was just being paid lip service to, as you've alluded to, the investment wasn't there to actually make it. So what do you think has changed in the past couple of years? Because I think you could start to see the embryos of that last year. And then people had real examples this year. What's happened, do you think, to make people start to think in those terms?
There's a few things, really. I think we've still got a battle for claims practitioners to be heard at the executive level. And for, I think recently we've been doing some surveys around, do people really understand what a claims person does? And do people really understand what a risk manager wants from a service? I do think there's been a change, and the change for me is on service-based products. So cyber's become such a prominent product for many insurers now. That is wholly, in most situations, a service-based product where you are not writing a check instantly. You are putting services in to rectify the situation. And then there's some risk mitigation stuff in there that's happening throughout the sort of life cycle, which is giving people more interactions with clients, with risk managers, because we have the opportunity to go out and actually have more touch points. And I think people are waking up to that. Now there's a limited set of products that you can be that service focused. D&O, for instance, is quite difficult. But actually the idea of giving risk managers more insight into what the D&O market might be doing is where people's heads are at. And I think that's it. I think people are realizing there is an opportunity.
Yeah, I mean, I agree. I mean, I think I said on the panel on the day that I think it's about competition and proof of commercial value for claims. And I mean, I'll say a few things a bit later, but if you just took those as the basis of any kind of product or service that you've got, I think the problem that claims has always had is it's never been minded to or had the ability to prove that it is actually anything more than a processing operation if a claim happens, and therefore it's tended to stay in the background. So proving it as a benefit is problematic. I think the other thing is, and we had Julia Graham there from AMIC, she's talking now, but it hasn't always, not just her, but also risk managers I've spoken to who have often seemed quite surprisingly ambivalent about claims, spending much more of their time on the terms and the policy than, and even the policy issuance than actually the claim and what could happen and so on and so forth. So without anything triggering that, I think we had years and years, as Jeremy said, of nothing much happening because there wasn't really any drive for that to happen from the customer. And I think the customer ultimately decides everything. So in the odd market that we are in, intermediated market, I think what has shifted from what I can tell is that brokers are generally more interested in service because they've got nothing else to compete on. And it's cheaper than nicking your competitor's staff, right? Because I mean, Howden, for example, I think has paid fines up to 100 million. So that cannot be a good way of doing business. Call me old fashioned. And so if you, but I have, this is not just supposition. I am talking to big brokers about exactly this, which is service is their number one priority in inverted commas. And as soon as you say that, you've got to put claims in there because that's what customers ultimately will be most interested in.
Yeah.
And I think that changes then, as always, the narrative. And once the narrative changes, then you create a sort of competition around words or language, which is everybody starts talking about this thing and suddenly it becomes, God, claims, we better do something about claims. And now I think that's just started. I don't think the problem we've got, and I think you've referred to this, is the understanding is so low and we've got a structure and there's kind of an embedded workforce who can't sell mostly. I'm sorry to be rude to claims people if they're listening to this, but they're mostly technical. They mostly think technically, and they mostly think that they should explain what they do to look good by talking about technicalities. We just did a piece of research and with the IACP, and claims people said, well, the problem is leadership doesn't understand us because they only are interested in the cats and not all the sort of detailed smaller claims we do. Well, I would say, well, why should they be interested in all the small detailed claims? They're running the company, and that should be the detail of, how they make the car engine work. I mean, I think it is about the profile of claims and what your organization, your insurer, or as an insurer, you're delivering to that customer. And I think you're right, Paul, that you have to get that. We now have to look at what that really means for a customer.
Yeah.
And how it tracks back through that distribution chain as well.
Yeah, I mean, this is what I was talking to some of the other. There's 2 points. One is when Edward Lloyd and his peers were sat in the coffee house, they didn't talk about, do we fancy swapping some premium around each other? It was about what happens when something goes wrong. How can I be rectified? And this is where indemnity began. Yeah. I think the second part is we've started speaking to lots of risk managers in the view of getting a better understanding of the value chain and what people are after so that we can change our services and where we focus. And people don't buy, they're buying a marketing team. They're buying Beasley Pink or Hiscox Red or Chubb, and I'm a bit dumbfounded that we don't know what we're really selling into these instances.
No, you're right.
Out there that are not selling service, they are selling a price-driven decision or a brand.
If you look at, that example I just gave was partly to tee this conversation up. It's just to show I do actually think about it, Jeremy. But the idea was that if you looked at that thing about fine art, they're entirely reliant on the legalities of that policy to work at the point at which the claim happens, which could be a long time after. But what they're actually saying is it doesn't really work, because we have to really go back to square one and decide actually what the hell was this product that we sold to this person who's now had a fire and some smoke damage of some priceless art. It does seem to me that, to your point, therefore, the product wasn't really explaining what it was supposed to do at the beginning.
Yeah. 100% agree. And I think this is where we've got to get better at thought leadership, and we've got to get better at actually training the value chain and being able to sell it. There's just too many points in that value chain at the moment. I've done a lot of stuff on product development over the years, and we've brought to market some pretty cool stuff around training videos, what's covered, what's not covered, those interactions. What's really interesting for me, so this week I unfortunately had an altercation with an HGV, and lost. We're all okay. My daughter was in the car, but we've lost the side of the car, and I'm testing out my promise to pay right now. And within hours, there was a phone call back to me, very prominent UK insurer. I'd used a digital journey to sort of register the claim, take photos of it. It walked me through it, and everything was great until I had a question and I needed to talk to a human, and then it sort of all evaporates, right? But the phone calls, now I'm bombarded with technical links here. Do this, upload this document. I know exactly where I am in the process, but actually I just want the problem to go away. I want the car off the drive. And that's what a risk manager feels, right? So I think there's this fine line now between us going fully automated, making too many decisions, and, what do you sell? Now, if I knew that up front, when you have a claim, this is what's going to happen, this is the process you're going to go through, then I'm buying into that. I get it. And I think that's what we've got to get better at, is explaining what will happen in a situation. And this is where some of the insurers that I was listening to, and some I know are differentiating, is those claims people are in the conversation at the point of bind. They've been introduced, they are part of the buying journey, and they're doing onboarding calls as well, which is fantastic, because the risk managers are building that rapport and that relationship. Now, when you're 10th on the slip, you're probably not getting the access, but the lead claims team should always be there, I think, on that onboarding call, and build that relationship really early so you can start managing expectations, because that's all it's about.
In the end, and for example, the regulator is very clear on this. The insurer owns that claim. And I know I've sat, in fact, at one of Jeremy's conferences a few years ago, where the broker said, well, we own the claim, and there was a customer arguing with them in the room, and I was unfortunately having to facilitate this row with a client, and risk manager saying it's our claim, not your claim, and the broker saying, well, it's our claim, you don't even understand it, you need us to understand it. So I think we're past those days, maybe, but
hopefully,
but in a regulatory sense, they're very clear that the insurer, even if they outsource this, owns that claim, and they're responsible for its outcomes, and so on and so forth. And that's good, I think. I think that means it is very much tied to those insurers to make sure that product works. But I think as you say, the issues are really this investment, if you like, in both, if you're using technology, which clearly you're going to have to in the future more and more, and it does work quite well, particularly for MI, but getting that balance right between people and that technology it goes wrong. We've seen it go wrong in the research that we do, and when it goes wrong, it really goes wrong big time, because I think your experience in a microcosm of I now can't talk to somebody is repeated all over the digital service space. Yeah. And it's probably all come from exactly the same issue, which is, someone in finance says, brilliant, we've got technology, and let's just fire the people and then save some cost. So I think that is really key. And your point about managing of expectation on these things, because I think back to that fine art example, I don't know that we're going to, certainly in our lifetimes, get away from the fact that insurance has, even at simple products, have some sort of complexity quite often, because the product is sold that it might not happen, and that's unusual in a market. It's you sell something, the insurer hopes it doesn't happen, and so does the client, I think, but when it does, there's still a bit of oh, we're a bit surprised by this, we better get our ducks in a row on it. So I think I think because of that, you're always going to have this. We've got to work out a few things at the point of claim. But I don't think we're very well set up for that. I mean, I think what we see is at FNOL, that's where all the, if you don't get it right at FNOL, then it spirals out of control quite often, and it costs the insurer a lot of money then to fix it.
Yeah,
because a sort of process kicks in that, you know, invites the lawyers in, and it invites, you know, and then even, I mean, I've spoken to big insurers who said we've had ridiculous tiny claims that have gone on for years because our bureaucracy took over, type thing, you know.
Sorry, Jeremy. Go on.
No, I was going to just move the conversation on slightly to one of the things that you mentioned, which is around kind of talent. And we've been kind of, in our discussion so far, been talking about kind of service and trying to contact people and that type of thing. And one of the questions that came up a couple of times, and you've mentioned it, is the talent that we'll need in the industry may have different skills than perhaps traditionally we've needed over the last 20, 30 years, whatever, as technology comes in and hopefully helps to enable better processes and enable people to do their jobs with more focus around customer outcomes and speeding up or streamlining or whatever the thing is. Where do you see the talent challenge? Is it that we can't recruit enough people into claims because it isn't seen as kind of the sexy area, or is it because the skills and the technology is changing at such a pace that actually it's difficult now to put in a training path? What do you see as?
So I think there's a couple of things here. I mean, I was a 16-year-old claims broker. Just took a job like most people, fell into insurance, but kind of got the bug quite early. It didn't stay in claims for too long, actually. I had a journey through outwards of insurance operations. I think we've got this massive gap. You know, I don't know that many sort of people coming into the market who I don't know that many experts that are being hired. You know, when I speak to claims people that I've known for years, they were cyber legal offence attorney or a marine underwater specialist. You know, they were all very specialists, and we still need those people because, as Ben says, these things get very complex very quickly. Where we're focusing now is really with this digitization is on our more commoditized products. So we probably need more service-based people who are more comfortable having maybe awkward conversations, but communicating directly, because that's just about human in the loop processes. Where I think we're struggling with claims is it's just not sexy enough. We're not telling enough stories, and you know, we're launching a series soon called Storytelling in Claims, because I think we need to be telling people how we save people's lives, how we help the families get back into their houses, or when there's been an event, how we provide mental health service for people when they've had an event, how we keep businesses afloat with you know, cash flow when they've had an event. And we don't tell any of those stories. You know, you pick up any news article today about insurance, it's about the prices, how much it costs, and we don't explain very well why it costs that much money. And we've never talked about actually the complexity of managing a claim with all the third parties that have to be involved. So I think we need to get better at that, and I think that's going to solve two problems for us. One, it makes it more attractive, and I'll come back to that. Secondly, other people in these organizations are really going to understand what these claims teams are doing. They're going to understand why, the value of it, and they'll start realizing this is why we exist. On the talent piece, the LMA have put in the claims forage process. I think that's how you pronounce it. And it's fantastic. You get to go on and you get to experience a day in the life as a claims adjuster, and you get to actually answer questions, and they've done a bit of process changing there. And I think that is brilliant. And my niece has just taken that and decided, actually, I'm interested in claims. This could be a career for me. Got some experience of the aviation world. So I said, well, go and be a claims aviation expert, which no one's probably said for 6 months. But it's a perfect career choice for her. But without that forage process, she would have just gone, oh, it sounds really boring. you know, we've got to tell stories. I've told her some stories of claims that I've been involved in the past, and she's like, that's really interesting. I can't tell that many interesting stories about when I've been involved in a renewal cycle for a client. So I think we've got a really big opportunity to really present to the world how good it is. And lots of people are coalescing around us to help do that, Ben included.
And you talked earlier on, Paul, about well, technology helping, and I suppose a kind of evolving workforce. What, you know, with sales skills and things like that. To me, that kind of, I know we've done research on this, so I'm being a bit unfair, but it does imply you're going to have a kind of reskilling operation as well here, and then
that's the problem.
And that is a real I mean, it might be interesting now, but you're kind of saying to your niece that it's interesting now, but in a few years' time, this might be really, really different.
Yeah.
If it shifts as we think it might, it could be a really different sort of job. So it might be good for her to get some sales skills if she hasn't got them already.
Yeah, but I think people are being told that across all industries, all roles, right? You know, AI is going to take your lunch money, blah, blah, blah. I think everybody's going to have to be adaptable in a few years. And I think they're kind of a little bit open to it, and they can see it evolving. I mean, the claims role has changed an awful lot from even when I was doing it, because we are using more technology, and the transfer of data does happen, although we don't profess it to say it in the market. I think, Ben, the challenge is, what do you prioritize? So I talk about it in the article. We're trying to digitalize our functions. We also want to get the best talent. We also want to have the best customer service, and we also need to manage claims while we're doing it. And most of these claims teams are firefighting on a daily basis. Yes, it's peaks and troughs, but they are firefighting. So when do you find the time to do all three of those things, as well as all the reporting you have to do? And so there's just not enough capacity to think of these things. So everybody just carries on doing what they're doing, which is the status quo. And I think you've got to prioritize one of those. And for me, that starts with the customer service bit, because unless you go out and talk to your clients and find out what it is they want from you, you're going to digitalize the wrong part of the process.
Yeah, I mean, I think what you say is spot on, and I think there are lots and lots of things you could look at if you look from within the market, from within inside the industry, and go, well, what about this and what about that? But you just end up with a long shopping list of things that we need to do, and you can imagine then why, you know, CEOs or CFOs go, well, I don't exactly know what you want, and I'm not spending money on everything. So you kind of want to prioritize against something, as I said earlier on, that is going to create a difference. So I completely agree with you. I think we need to understand, both in terms of efficiency and creating, you know, competitive superiority, that you can understand what clients want.
Yeah.
You know, beyond just we'd like it settled quickly and at the quantum we expect, you know. And your point about cyber and all the services alongside that could well be that actually you also start to think about claims. And this does, of course, happen where there is earlier or complete organizational involvement when they're talking to a customer even before a claim happens. So pre-inception scenario planning and all that sort of stuff, which is, I don't think it's universal, but I think a lot of brokers are pushing on that now, saying, well, we should charge for this, and it should be much earlier on in the process that we start to talk about this. So I suppose what I'm going to is that does there need to be a kind of a sort of fundamental structural root and branch change in the industry as to what its proposition is for the customer?
Potentially, and I think that comes out if you do your research. I've walked into quite a few transformation programs where people are automating ingestions, and I always question why. You know, is that the right thing to be tackling? You might save 20 quid a submission, 30 quid a submission, but actually, could you be getting 60, 70 quid a submission by transferring that data onto the follow market? Like, how do you commercialize these things that you're doing? The same with claims, right? How do we commercialize this data? And Beth Diamond at Beasley was always fantastic, because she always said, we are the canaries in the coal mine, right? We smell the gas first and foremost. Yes. We see the trends, but people don't always ask us for our help. Actually, if I could attract anybody into the market, into claims, it would be people that can really understand trends analysis and understand have I got a big problem cut across this portfolio? And should I be raising the red flag to the underwriters, now? That is a skill. And that for me is a valuable service you should be offering brokers. And there's a commercialization there. Because brokers don't really want to see claims either, right? They don't want to manage them, and they don't want their clients to really to have these events. So there's a service there that they can then push further up the value chain.
Yeah, and I think, I was talking to some people this week, interestingly, and I think they were making a couple of points about, this is on the broking side, about, the changes are so much more is outsourced now, so that people coming into the claims teams when they're starting, don't really get the same sort of technical training that they used to get.
Yeah.
Now, therefore, you've already got a situation in which you're sort of saying, I'm not quite clear what you're going to be doing. If you're not technical, what am I going to be doing? Because that's all outsourced. So you're pushing people towards this kind of sales scenario anyway, that you're selling the benefits of it and managing it with the customer or the broker or the broker.
Yeah.
And I think another thing that was said by the person I was speaking to said, I think that, things like the word claims advocate, I'm not really keen on that, because that sort of sets up a sort of battle between brokers and insurers over getting the right price. Now, that may seem quite, good if you're just looking at it as a claim on a transactional basis, but it's not a great way to run an industry when you're supposed to be collaborating across a value chain. And just one other interesting thing that came out of the conference was talking to someone from one of the brokers. Now, I won't name it here because I bet other brokers are doing the same thing, but they said, we were talking about language and claims, and my campaign is to get rid of the word claims because I think it's a negative word and it's past its sell by date. But the person I was speaking to said, we don't have the word claims in any of our so-called claims people's jobs. We have terms like solutions and client, client service people. So I think that is happening anyway. I think, and if you that kind of, Beth's point about looking ahead, that seems to me that if that language is changing and people saying, well, let's change all the job titles, you really have to think about that. That's not like a minor.
Yeah, you can't just
shift, is it? You don't go, let's take the word claims out of everything that we do. It's not an accident. So it's very, to me, that's very interesting that it's kind of happening anyway, because the discourse around it is changing. But maybe claims teams are a bit left behind because they still think they're doing the same job in some way, shape, or form.
I think so. Probably it's down to sort of manage expectations, communication. But to come back to that point, you don't make these changes. You don't just decide to change everybody's role title. What I always say is, like, have you tested this? And it's like, the whole desirability, feasibility, viability. Like, is it desirable? Do your clients, are they going to understand it if you do make these changes? If you become more service operated, do they want this volume of additional data that you might give them? That's a desirability, right? They might not want it. They might not care. Feasibility, can you do it? Have you got the team to do it? Got the capabilities to do it? And viability, is there a return on investment? And that's kind of what we do. We go in and we don't just go, we're going to deliver this thing. We're going to test this hypothesis that you've got. And that's what my point on the article is, that's what I'm seeing a lot more of, actually. And I'm more encouraged that when we do say, have you gone and spoke to your clients, and people go, no, okay, they do. And they do it.
It takes you into that thing I talk about a lot, which is sort of counterfactuals, isn't it? Where you say, well, that was the mantra, but that's not actually what happens in real life.
No.
I had a really good example a few years ago where everybody said, well, we've got to get the claim paid quickly, and that's the most important thing. And
it's not it.
Sat down one night and I thought, I don't even see why that should be the case. And I rang up a claims head who I knew very well, who was kind of on the same page as me about service. And I said, do you always need to pay claims? And he said, no. Quite often for big companies, we put it into escrow because they don't want that money at that point in their investment cycle or whatever else they're doing. So, and that's a major benefit. So, so in one sense, the whole industry was going down this route. We just got to pay claims fast, and they were setting up for that. Whereas in actual fact, a great benefit could have been, we'll store the money for you somewhere else, and
or provide additional services, or reduce
services. Exactly.
There's so many different things that people want. Even if you get down into the small and mid-market where you've got business owners that are the FD, the head of cyber, they're the IT manager, they're everything, right? I run a small business. It's the same for me. I don't necessarily want the cash. I want you to help me with additional services or provide some additional insight.
Yeah, I agree. And a very quick one, which I think is there's this kind of schism in the industry over which underwriters will write cyber and which ones won't. And, you've got, Catlin and Brando at Convex saying, and even Warren Buffett saying, it's like cyber's like rat poison. Once it gets in the thing, it kills everything. But and others like Beasley saying, and CFC and others saying, what a great product this is, right? And I don't understand why that is a sort of black and white situation, because it seems to me that the Beasleys and the CFCs have done something. They've created a product that they can still make money from so far, and they've done a great marketing job on that product and added some extra services, which has allowed more diverse fee income.
And for me, the crown and jewel in all of that is the ability to have an interaction with your client.
Yeah.
And by providing services, that gives you more talking points with your clients. It builds advocacy. And what I've said it before on this most of the time it's ambivalence. I don't care who I'm insured with. It's Lloyd's, isn't it? Or I'm insured with Aon, maybe not risk managers, but they don't necessarily care. You've got to turn that ambivalence into advocacy. And if you do that by more services and a better service when they do need it.
Or choice as well. That's the other thing, is that I might want to get just a basic service and not pay for extra bells and whistles on my claim service. I'll just have the standard one. It's like,
hopefully I haven't done that on my current insurance policy.
But you could do an Amazon Prime, couldn't you, or something, and go, look, I've got the, you buy that service and you will get your claim paid within an express rate or something. And
we'll probably
there's none of that, But anyway, I think innovation, isn't it? Part of it.
Yeah.
Sorry, Jeremy, we might have spent a bit too long on that one.
No, that's fine. I was hoping to also talk about technology, but we're not going to have time to do that. So AI, of course. Yeah. Well, we've got
that next time. Yeah.
We'll do that next time. Yeah. So basically, I've been doing a bit of research between kind of the results of the pre-event survey for Tintech London Market in 2023 and 24, and we'll perhaps get you back on and we'll discuss some of the tensions and where we think it might go in 25. I think that'd be quite good fun. So perhaps in a couple of weeks we'll invite you back on if that's all right.
That'd be great. Yeah, thank you.
Good. Well,
that was our pet subject, wasn't it? We can't. Yeah, we need a longer show for this one.
Yeah, put my soapbox away now.
Very good. Right, great to see you. Have a great weekend.
Yeah, have a good one, Paul.
Bye.
See you.
It's always great talking to Paul, getting that perspective. And it's a really good article. I'll put it in the link to the show so people can pick it up, and it's going out on LinkedIn as well. So thank you, Paul, for coming on. So just before we go, Ben, I just wanted to kind of talk about the Data Jam, which is at the end of this month, the 28th, and actually a brand new session looking at the role of data and leveraging data within marketing and sales and what that means, some of the trends that you're going to be leading there. You've got a great lineup of speakers, and that looks like a really, really great session. Looking forward to it.
Very good lineup. No, you won't get much better than that, apart from me.
Yeah, you're on there. I can see you.
No, but I mean, apart from me being in there.
Apart from me. Yeah. So if you're interested in that, we'll be putting it out on LinkedIn, won't we? And I'll put the link in the comments.
Contact me or you if you want to get in early on that.
Yeah,
one.
indeed.
No
it's
problem.
limited places for that session. So there we go. Okay, good. Right. What are you doing this weekend, Ben?
Not a lot. Just me and my 16-year-old at home alone. So I don't know what we'll do. We'll go out somewhere, maybe do some bird watching, bit of rock climbing.
Yeah.
Father and son type stuff.
Great. That sounds good. I've got the only thing I've got on is a tennis match on Sunday. Which will be over very quickly if my current form.
My linked stat is I've got tennis elbow from doing some chainsaw activity in the garden.
Ah,
I
okay.
don't know if it might be called chainsaw elbow, but anyway, I'm calling it
Chainsaw
tennis
elbow.
elbow. Yeah.
I think that's more serious. You need
I
A&E
think I
for that
was
one.
so scared using it. I was like adrenaline rushing, and I was gripping it way too hard.
Yeah. There we go.
I've got a bloody bad tennis elbow. So yes. Anyway.
All right. Okay, good.
Good.
Thanks for tuning in, everybody. We will see you next week, and have a good weekend.
Have a good one. Cheers. Bye.
Burgess and Bolton's weekly wrap-up.